Well, hello everybody. Another crappy day in the markets, but there's just a little bit of a bright sign. Bitcoin just popped $200 since I've been standing here. And thank you all for coming. Thank you to Cypher Sniper, Sean D, TND Tesla, K8, and everybody else for coming. Let's get into the story. This one's called Panic or Opportunity. And we're going to talk about some new AIs, some new mobile data centers, some on-chain stuff, crypto news, MicroStrategy news, Bitcoin news, Tesla news, AI news, Apple news, scam news, etc. And a bunch of macro too, and try to figure out what's going to happen next, because there are, once again, dark clouds on the horizon. Let's get into it and figure it all out. Welcome to the story, and never financial advice, just a guy on the internet. And a big thank you to Haro-san. Good morning from Nicaragua, James. You're my only Patreon subscription, and it's worth it. By the way, I heard fantastic things about Nicaragua. In fact, a very good friend of mine, his wife is from there. And she's super nice. And the food is amazing too. Anyhow, moving on. I digress. Bitcoin just went up another $100. We'll take it. The ugly, lots of ugly news. So buckle in, my friends. And a shout out to, speaking of buckle in, shout out to Buckhorn as well. Hey, Buckhorn, I see you there. RektFencer. He does some sometimes very interesting posts about Bitcoin, etc. But he believes Bitcoin price is going to fall to $30,000. $40,000 was what many were hoping for over the next 2 months, which I believe will signal the bottom. But now the calls have switched from a $40,000 dip-a-rooney to $30,000. Like literally, you can just scroll through X and look at all the doomer posts. Quite remarkable. But yes, anybody can draw a line in the chart. Remember, the Bitcoin price is a function of money flow. Money flow in, money flow out. Not necessarily lines in a chart. Lines in a chart can be used to tell directions and identify tops and bottoms, but not a predictive mechanism for things like Bitcoin. That is a very different animal. And again, tied to ETF flows. And by the way, back up at $64,000. You can't make this up. The 64K has been a magnet for Bitcoin since Feb. Literally. What are we now? 6 months later. Deja vu all over again. Now, a little bit, if we're still on the ugly news, by the way. This is some news. Now, I do remember, I've been upset for a long time with the Apple Store. I have very few apps on my phone, if any, and most I don't even use. I think, what is the one I do use? I don't know, Robinhood or something. But Apple is dragged to court by a bunch of users after the App Store published a fake Sparrow wallet app on their iTunes store or whatever it's called. So be careful out there. And, you know, they should do far better due diligence, I believe. Apple is 1,000% guilty for this. You cannot have a store with trusted customers and have a scam app up there. And this isn't the first time that's happened, by the way. But if you were impacted by that fake wallet, don't forget to get your refund back, because $1.8 million, in fairness, to Apple is nothing. They have so much money. Anyway, speaking of money too, Kalshi sees $8 trillion in more debt over the next 2 years. 8 trillion, all right? We're at 39.5 trillion now. This is adding another 8.5 trillion in 2 years. Call it 4 trillion a year. That needs to be financed at about 4.2%, on top of the other 8 trillion that needs to be refinanced right now at about 4.2%, which would bring about $775 billion in interest in just those two tranches alone of 16 trillion. Forget the other 30 trillion that needs to be funded. It's getting ridiculous right now. And if you're not bullish on Bitcoin, just look at the debt. That's all you need to know. That's going to drive some crazy melting ice cubes as we go forward. That's what happens. And another bit of sad news too, for those who like collecting books. I have quite a number of books, and Sanjay loves vintage antique books as well. But the AI, some AI companies are actually putting these books, they're ripping off the spines and putting them through high-speed machines and then shredding them afterwards to train their models. So they're so desperate for training material they're destroying old books, which I think is a real crying shame. So I hope the AI companies that are doing this stop it. And Elon Musk is stepping in with the SpaceX AI team to preserve any rare books as well in the library and scan them the hard way, not by destroying them by cutting off the spine. So fingers crossed that happens. It's a shame. And we know what happens in history when books are destroyed. Not good things. Anyway, let's get to the bad news after the ugly news. MicroStrategy is now 5 weeks with no Bitcoin buys. The whole idea of a treasury company is to buy Bitcoin, not to buy cash or issue shares to buy cash, to stick it in a reserve, a cash fund, a melting ice cube fund, to pay dividend on a preferred that's supposed to be sold to buy Bitcoin. I looked at the chart today. It looks like MicroStrategy was ATMing again the MSTR stock, but now they have 3.75 billion in cash, and they're actually buying STRC back, which is inflating it back up about $88.5, $89 today. Their goal is $100, but they have now enough coverage for 2.1 years of preferred dividends. So there's very little risk in that right now, unless, of course, Bitcoin implodes. Either way, they're dead set on bringing STRC back. I think they should just wait for the Bitcoin market to come back rather than dilute MicroStrategy shareholders further. That's my personal take, and that's a TradFi take, and I hope you agree. Anyway, speaking of hope, and hope is not a strategy, there is now a 35% chance of clarity on the Clarity Act, i.e. it being signed into law sometime in 2026. There's talk of it being presented next Monday and kicked off, but, you know, I tend to really trust these predicted websites, Kalshi and Polymarket, because real people are putting real money on the line betting on this. Anyway, will it happen? Well, 1/3, 35% chance doesn't get me excited. When I see a Kalshi or a Polymarket saying 70, 75, 80% chance, then you can be pretty sure it's a done deal. But 38% chance, too low. 35% changes all the time. Fingers crossed it's wrong, but normally it isn't. And there's too many big money players against the Clarity Act. The banks are very worried about their deposits. By the way, you can get 6% interest on X money, which I do, which makes it very attractive. In fact, you could argue X money is also a threat to STRC. Anyhow, moving on. The other big cloud on the horizon is this. There is about a 37% chance of a rate hike tomorrow, which would really kick the market in the you-know-where. Not good. And a 77% chance of a rate hike by September. This is not good for risk assets. This is not good for Bitcoin. Bitcoin normally dips after a hike, but then rebounds afterwards. But the new guy, Kevin Warsh, was supposed to be very dovish. He understands AI. He understands deflation driven by AI. Why the hell is he going to be jacking rates on 40 trillion in debt? Is somebody going to whisper in his ear? I don't know. It's just madness. Fiat is madness. Governments are madness. It's all crazy as far as I'm concerned. But we have to watch them carefully. Crypto fear and greed is at 29. That's actually good news because we're out of the extreme fear for the first time in months, it seems like. Now, getting to the good news. And there is some. We're still up 9% so far. Actually, that's probably about 10% now because Bitcoin has just shot up a little bit. It's up to 64K, but it's been bouncing. Like, I think I've done Octa for 3 or 4 weeks where it's been up 9 or 11%. And here we are again. So it looks like we had a good fast move in the early part of July, but towards the end of it, we only have a few days left, there's no real movement here. And then we get into August. Historically, August is weak, basically flat. But everything's different this time, so you can ignore history. Crypto over the last, I'll turn off my camera for this, over the last 7 days. This is in Bitcoin terms, everything divided by Bitcoin. And you can see one thing, Bitcoin dominance is sitting at 58.19%. That's up a little bit. Binance is up, and everything else is red, pretty much bled against Bitcoin. And you can ignore the staked ETH and all that type of stuff. They're like almost like stable coins. For the week, 64,248, down 1.28%. Again, it's been a very quiet last couple of weeks for Bitcoin and crypto. It's actually been holding up incredibly well compared to other assets. And ETH is back at $1,931. That was at $1,500 not too long ago. And that's strong. Sol hasn't quite caught fire yet, considering it's the chain that does everything. But again, markets are completely irrational. Remember that too. Now, the Bitcoin ETFs have gone red again. This is the weekly chart, which pushes out all the noise. We're down 11.6 million. But remember, we're only one day into the week. That was Monday. So things sold off yesterday. We've got 4 more days left to calculate here. But we had those 3 positive weeks, although the last 2 weeks were only slightly positive. But still, we'll take that as a win. Ethereum is coming in $9 million. In fact, $9 million for the week so far versus minus 11. You could argue maybe the Bitcoin ETF folks are rotating into ETH. I don't know. But those numbers are uncannily similar. Sol flows are back. Again, Sol is a much smaller asset, but again, positive. And Hype went backwards for the last 3 weeks. They started off with a bang and then have just been selling off for the last 3 weeks. Will that continue? We don't know, but we'll monitor it. Now, more ETFs are coming. Morgan Stanley has been doing very well with their Bitcoin ETF. In fact, the Bitcoin ETF customers that buy the Morgan Stanley ETF tend to hodl it. They keep on putting money in. It's as if they have some type of maybe some pension or some fund, automatic perpetual bid buying mechanism. So it's good to see. They don't buy and sell like IBIT. They tend to just stick it in their bags. And they are launching today from Eric Balchunas, the ETH and Solana ETFs. The tickers are kind of weird. MSSE sounds like Messi, the soccer player. And MSOL, which is more logical, Morgan Stanley Solana ETF, are the 2 tickers. And the Bitcoin ETF has pulled in $400 million in 4 months. And that's launching in a very crap time. Morgan Stanley is a massive money runner. I think they have $8 trillion in assets under management. So when things really kick off, these could go big. And there's rumor that they recommend at least 4% plus 5% allocations to crypto. We'll see how much they get. Anyway, another piece of news regarding Bitcoin holders. This is a big surprise, a big upturn from on-chain metrics. Shout out to Axel as well. If you look at the amount of holders that are in profit for Bitcoin, it fell to like a multi-year low that it fell to, I think, 46%. Last time it did that was in 2022. You can see the little red piece. Very, very bad. That means 54% of people who hold Bitcoin were holding at a loss. Now it's flipped. Now we've gone from 46% of Bitcoin holders in profit to 56% just in a couple of weeks. That was June when we measured the June low of 46%, which often signals the bottom of a bear market when that many people are bleeding out. Will history continue? Once again, we'll wait and see. Stocks over the last 7 days have also been pretty brutal. We have Tesla down a whopping 17%. Markets freaking out all over the place about CAPEX. I plan on doing a CAPEX video on Tesla because a lot of people are concerned about it. What are they building? When will this thing turn around? Where is it all going? Yeah, it's been a stinker. But remember, it's about $10 away from where the price was back in April. So it's not like the sky is completely fallen, but people have short-term memories. But it's not good nonetheless. I'll give you that. Amazon down over 7%. Google down 5%. Google has recovered a lot. NVIDIA 5% down. Apple 5% up. Broadcom down 2%. Micron down 11%. Memory is getting smashed as well. If you don't have any memory, it's an easy play. And it's way off the highs. I think Micron is under $800. And it was the all-time high is $1,250. And it's selling off for reasons that make no sense. The reason the AI stocks are selling off is because, well, obviously the bubble talk, but also people fear CAPEX. Are they spending too much? But remember, in the age of AGI, you cannot grow unless you invest. Imagine building a railroad and not investing. Do you know how much track you'd lay? The answer is none. Especially now, we're in a very capital-intensive time because the stuff to build AI and AGI is expensive. Chips and electricity and all that stuff. Transformers, you name it. Actuators for robots. Anyway, it's been a rough 7 days. Let's talk about stock fear and greed. 38 in fear. It was neutral last week, so it has dipped a little bit. And probably some of that fear is driven by Fed fears too, that they will hike rates. And for those who actually care, we had a historically, I'll turn off my camera again so you can see this whole chart. Speaking of Morgan Stanley, this is their semiconductor index, and it has had its worst month since 2022. And investors are shifting psychologically. And just put things in perspective as well. April was the best month this index ever had, and it gave back a third. So if you add the April gains with the May gains and the June gains, we've given back less than a third, about a quarter. But that's what happens. Everything mean reverts. You've heard me say that 1,000 times. So after such a thing, especially during summer doldrums, things can tend to stink. But the big fear now is not bad news or bad earnings. The profits are through the roof. But every new AI announcement is now being judged entirely on how much capital they're going to deploy. The CAPEX fears are freaking people out. And here is a brand new CAPEX chart. Shout out to leveraged shares. For the first time ever, SpaceX has been included as a hyperscaler. There's now 5 of them. Google, Amazon, Microsoft, Meta, and SpaceX. One thing I do want to point out here, and this will be part of my video next week or this week, if I can get to it. Let me know if you want to see a video on CAPEX and why it's important. Why you want to invest in companies that invest in CAPEX rather than those that don't, as long as they know how to spend it cleverly. You don't want people wasting money in that circular type economy and stuff. But we do know that SpaceX is very lean and mean when it comes to spending money, and the hyperscaler CAPEX is heading to $1.4 trillion a year. And I know we throw around the number trillion like it's nothing, because US debt is heading to 40 trillion, like nothing. But 1.4 trillion to be spent across 5 companies a year is a truckload of cash. So don't gloss over $1 trillion. I remember when I was a kid, even the thought of $1 million was insane. Even in the 90s, $1 million was insane. And now $1 billion is commonplace. And $1 trillion is just another word. It's a crazy time. Anyway, what you do notice about SpaceX is they have a very small allocation to CAPEX. And they put the biggest flying machines into space. And they support 11,000 satellites in space. They got a global comms network. And they have the most coherent compute clusters on the planet that the other hyperscalers even buy from them, which is kind of funny. Google, the biggest spender here on the list, is actually buying compute from SpaceX. Can't make this stuff up. It's crazy. And AI is about to change. If I was Anthropic or OpenAI, I would be worried because this guy is the founder of OpenAI. His name is Ilya Sutskever. And he was the guy recruited to build OpenAI by Elon Musk. They know each other very well. But he has a secret AI lab that he's been building for 2 years, a thing called SSI. You're going to hear a lot more about that, safe superintelligence. And they are a couple of things that are interesting about this story. They're ditching Google TPUs for NVIDIA's next generation Vera Rubin GPUs and making the AI infrastructure war very interesting. Again, we're seeing pivots from different hyperscalers to different hyperscalers, and we're seeing chip makers getting directly involved in a lot more investments in AI so they can own it. And NVIDIA has rare access to SSI's very closely guarded research. They believe, and I think Sutskever has been saying for a long time, that the age of scaling LLMs is over. He is going to disrupt traditional frontier model LLM architecture. How? We don't know, but NVIDIA probably knows now. And maybe it's also optimized for these Vera Rubin GPUs as well, which also, it's rumored that Elon Musk has bought 30% of their production capacity as well. So watch this space very carefully. There could be a new AI game in town, and that could actually put a pin in the company he founded, OpenAI, and maybe Anthropic too. So we're seeing everything changes every 30 days in this day and age. So buckle in and stay on top of it. Now, other things that are happening too. We know that it's very difficult to build data centers, very difficult to get the real estate, get the permits, get the power, get the chips, get the connectivity, all that stuff, the cooling. or security. Like when you got like $1 billion of chips inside a building, what happens if somebody dropped a drone bomb on top of the roof of the building? One of the things that keeps me awake at night, and I don't even own a data center, but that's what would make me very worried. But Anduril, pre-IPO company, one of the I-13 names, is now developing mobile data centers, and they fit inside storage containers, 10-foot form factor. And within this machine, you have everything. You have power, you have processing capability, you've got comms, and it can be set up in 10 minutes. Imagine how long it takes. It takes hyperscalers 2 or 3 years to set up a data center. This can be done in 2 minutes. And it can be deployed anywhere in 2 hours. They can fly it in under a helicopter and just dump it somewhere. And it doesn't need to be plugged in because it has everything in it. So this is one of the things that's you're going to see more of in the future. You know, for years we spoke about how Bitcoin miners go to where the electricity is the cheapest. Now you don't even need that. You just drop these things anywhere. And Tesla also have their own version of a mobile data center that's called a Megapod. They can also drop these anywhere on the back of a truck, and they can put them, park them directly at Tesla's charging stations. Again, they'll need to make sure they have a lot of security at these places, but a completely self-contained place. And it's funny because in a few seconds, you're going to see some slides as to how electricity prices vary across the United States. But if you have this connectivity with Starlink and all this power, again, just like a Bitcoin miner, drop this anywhere. Anyway, we had something happen which nobody really paid attention to, but it was a Turing test moment, excuse my pun, like a touring car championship, Turing test for AI. Coast to coast. When I was a kid, there used to be a movie called Cannonball, where the guy's, I can't remember his name. He had a mustache. He was a very good actor. But they used to race across the country and avoid police and all that type of stuff. But now people are doing it with Teslas, and they're doing it on pure FSD. They're not touching the wheel or the brakes once. I've done that a whole bunch of times, but only for 250 miles at a time. But imagine driving coast to coast. It's fascinating. But the head of FSD and AI at Tesla said it is a Turing test for self-driving. This is something they had planned 10 years ago. They never thought they'd ever achieve it. Now it's commonplace. This is not the first time cars have driven. Burt Reynolds, thank you for that. Sometimes I hear talking live. Thank you, Larry. Burt Reynolds. Yeah. Awesome. Cannonball Run, the movie. I wonder how you can see these old movies. Sometimes when I go and look at a movie I saw when I was maybe 10 years of age, it looks so old-fashioned, but I guess I'm old. Anyway, what is interesting to me is the cost breakdown of this. The guys tracked everything. There was 3 of them in the car too, and that's a lot of extra weight. But it was interesting to see that Nebraska has the cheapest supercharger electricity, and Nevada had the most expensive, which I thought it would have been California. Anyway, it all depends on where it is, the time of day, etc. If you go to a supercharger at night, it's a lot cheaper when it's off peak. If you go there during the day, it's more expensive. So that's probably a factor here. But I took all of these metrics and I was fascinated by it. I love to find out exactly what is the average speed, how much electricity did they burn, what did it cost, etc. Well, they did call it 2,900 miles, 4,700 kilometers. They did it in 47 hours and 15 minutes, which includes potty breaks and charging breaks. They stopped for 6.1 hours, 26 stops, 14-minute average. So they're very clever how they stop. They probably wait for the battery to get to 20% and then just do 14 minutes to get it back to 50, 60%, and then move on. Save time. Driving time was 41 hours, and the average speed is over 70 miles an hour. And this is not them driving. This is the car driving itself. Flawless. And they did this in a car that went over 20,000 miles on this trip, FSD only. Nobody has driven this car for 20,000 miles straight. Never once touched the steering wheel or pedal. It's shocking how good FSD has become. That's the point I'm trying to make. And nobody knows about it. Nobody cares. But that's okay. Cost per mile, 10 cents. They spend $299 in electricity. Imagine you're in a car doing 20 miles per gallon. Imagine how much gas you'd pay for, especially at $8 a gallon in California. The equivalent to MPG is about 123 miles per gallon. And if you were to hire a limo or a taxi to take you across the country, it would cost you $13,000, not $299. Absolutely incredible. And by the way, they didn't even pay $299 because David Moss has free charging, free supercharging with his Tesla. I think you get free supercharging for the first year or something, and he's using it. Boy, is he using it. Anyhow, back to Tesla. And I know the price sucks. Yeah, it's like, it will eventually rebound, no doubt about that. But there are literally hundreds of cybercabs and robotaxis all staged in Houston. And the question is, are they going to sit there for another 6 months, baking in the sun, and it gets hot and humid in Houston, very hot and humid? The answer is, I don't think so. That's not what Tesla does. They're very cheap with money and CAPEX. This is money sitting there unutilized. I don't know when they're going to turn these things on, but hopefully it's soon. Hopefully. Fingers crossed. And back to building, they have started breaking ground on the advanced chip fab. This is the precursor for testing before they build the terafab, which will be 10x larger, or 10x larger than Gigatex's factory. So I'm fascinated with what they're spending on. You'll be mind blown if you're interested in where the CAPEX is going and how that compares to other hyperscalers and other companies. A lot of other companies don't make stuff. They just buy stuff from other people. Tesla actually builds stuff. And the ROI, that the cash that they spend per Ron Barron, is like nothing he's ever seen in history. That's why it's interesting to look at. And one of the factories that they're building very close to this factory I just showed you is a humanoid robot. When you look at all the humanoids that are out there, they're still very, very primitive. They're not durable. They have no hand dexterity. Their capabilities, their brain, their ability to use vision, etc. Yeah, they can do party tricks like dance and kung fu chops, but how good will they be in the real world? I don't know. But I do know over the next 2 or 3 years, you're going to see tens of millions of these all over the place. You may even have one in your home, if you're lucky. Somebody to hang out with, do the gardening with, cook with. I don't know, maybe even have a beer with. Wouldn't that be fun? Although I doubt the components are beer proof. Anyhow, finally, a little bit of macro news, which took me by surprise. And remember, this is the failure rates of different businesses across the world. And surprisingly, because I always thought US is very mean and ruthless, etc. I know the restaurant statistics are brutal here in the US, where most restaurants and bars shut down within 2 years. But US firms heavily outlast their global peers. And you can see here, over a quarter of German businesses fell within a single year, and 65% fail within 5 years. And in the US, the 5-year failure rate is much more resilient than these other places. However, I will say something. The other place on the map, just make sure I get them right. Green on the left is USA, yellow, orange is Germany, UK is light blue. Actually, UK does very well for the first year, and the EU is dark blue. But US is best, EU second best, UK third. UK somehow falls off after year one. I don't know why. Maybe it takes some time to fail. They don't fail fast. And failing fast sometimes is a good thing to do as well, rather than go down the wrong path for a long time. But one thing I do have to say about this is, in the age of AGI, expect failure rates to be far faster and for there to be far more companies, because now we have a phenomenon where everybody's an entrepreneur. You can have 1,000 employees without having any employees by using AI agents on your behalf. And that is what is crazy. And finishing with meme du jour, it's just one of the things about undulations in price. I thought this is very poignant and very appropriate for today's market. Yes, disruptive stocks are getting their butts handed to them. But if you look back in time, if you look at Micron a year ago, it 13x'd, and it's fallen back to 800 from 1250. That's just how things work. But if you look at this Reddit post, and I don't do Reddit, but somebody shared this with me. Exactly 12 years ago, the user was asking, is it too late to start investing in Bitcoin? I missed the sub $32 phase, and I'm hesitant to buy 10 Bitcoin now for $2,500, because at the time it was actually $250 because I checked it, not $300. But maybe there was a spread, bid ask, I don't know, back then, depending on the exchange you were on. But this perfectly illustrates the importance of spotting those early asymmetric home runs when they present themselves. And don't quibble over, missing $32. Now it's $250. Oh no, it's too much. I'm going to wait for it to go back to 32. Sometimes it never goes back to 32. So bite the bullet. Okay. And I know Bitcoin has sucked over the last year or so. That's just how the cookie crumbles sometimes. But over time, when you're in these disruptive assets, you won't even notice. So don't quibble over pennies when you want to bite the bullet. Not financial advice, of course. And I hope you all learned something. All these videos are turned into a full breakdown, daily recaps, slides, etc., podcasts for 10 cents a day. Thank you to the team that handles all that for me. And I hope you all learned something new today as well. And a big thank you once again to Buckhorn, Sean D, T&D. I got Hotel Snob here too, Cypher Sniper, K8. And is SpaceX a home run? Let's just do this quickly, okay? So SpaceX is going after space. They have global comms. So they have the most coherent compute. They have the ability to scale. They've got Starship. I made a post on Patreon over the weekend about how SpaceX could easily become a $10 trillion company because they're the only player in town that can take things to orbit for about $100 a kilo, and they can sell that capacity. If they can do 200 Starship launches with a full payload, it's a $10 trillion company. The question is, like everything else in investing, how long will that take? That's the question. So is SpaceX a home run? Yes. Could it go lower from here because of unlocks? Yes. That's where we are. So it's tricky. But you're buying under 135, which is the IPO price, which is considered very fairly priced. And it was at 113 today. So, Jonathan, I hope you like that answer. I love these little impromptu questions too, because that's what the channel's all about. Thank you all for coming. Hit the like and subscribe if you haven't. Hope you enjoy the show. I won't waste your time ever. Thanks a lot.